Mic check, mic check. What's going on, everyone? Happy Friday, fun Friday for sure. We get to tie up this week with a nice session. It's nice seeing Cardano flying. It's nice making sure that we're positioned on the right side. I kind of wish that we were holding on to the Bitcoin. I do, but we right now have Ethereum and Cardano positioned long. We're seeing, it's funny, in yesterday's session, we were talking about how Bitcoin dominance, someone brought up in the comments, was trading at 2-year resistance. Into that resistance today, we are seeing some alts perk up. Amongst them, of course, Cardano right now up 7.5%. We'll take a look at that in a little bit. I'm going to start this session off talking about this beautiful pattern we see here developing on gold. This is looking at the monthly time frame, and I want to break down a few different things for you. I want to make sure that we take a look at, first of all, and aware of the time frame. This is the monthly chart. If you go ahead and you look, going off the bottom over here, this is coming right around 1999 and up until right over here where we started, we ended this big super trend. It was 144 months or approximately 12 years. Interesting in as so much that since then, we've been now basing in what is a beautiful cup. Look, length, generally cups with longer, this is a long 12-year cup, and more U-shaped. You're not looking for a V-shape. Anytime you have a cup that is not really that long in length and is a V-shape, it's not really, doesn't show the characteristics of a cup and handle type pattern. This one has a beautiful U. It's got a beautiful rounding bottom, and it's been going on for just about equal length over here. It has been going on for roughly the same time over there. I'm just trying to get that green. There we go, blue. Again, almost 12 years in length. Another thing that you're looking for is that you're looking for the handle not to be too sharply down. You can see over here we have a nice handle. Look at the handle that's occurring over here. And how you draw that, I'm just giving you a little bit of insight into what I see, what's going on over here. A lot of people are looking for different things. There are those that are looking to create wealth. There are those that are looking to preserve wealth. There are those at different points of the cycle are looking to be more cautious, and that there are those looking to take more aggressive actions. Now, in my opinion, the time to be aggressive is things like when you see the bull of all bulls running, when you are seeing the beginning of the money printer go burr. Right now, it looks like to me, and we'll talk about that in a little bit, that what we saw was an injection of liquidity, a growth in the balance sheet of the Federal Reserve to compensate for what was taking place with the pressure on the banks. That's different than buying outright securities in quantitative easing program. When that returns, that may be the time that you want to get a little more aggressive. Right now, the market is beginning to price in the next part of the cycle, which will be rate cuts. Well, we got to get to the pause first. Now, the reason I bring that up is because once you get towards the rate cuts portion of the cycle, what generally is happening is growth is slowing down. Now, a lot of people thought last year, as the Fed began hiking rates, that not only would things slow down and send the U.S. economy into recession, but also something would break. Their timing was way off. There's no question about that. It was just recently that we started saying, you know what? It looks like things are getting a lot closer to things breaking. Let's see what happens in the fall. Right after that, the U.S. banks went under massive pressure. I mean, things broke. It's not at all what I was expecting. It was in the sense that we were looking for, when things break, it not to reflect a crash and burn as everyone expects, and then the Fed to go ahead and just resume quantitative easing. But again, it's in the fall that I still look for or am concerned about what could happen. I am not the type that believes that, like, with any type of certainty that the bottom is in and it's just go time. I'm very concerned, as we looked at in yesterday's video, the liquidity crunch that we could be seeing once the U.S. Treasury begins new issuances in order to raise and bring up their cash balance, which they are currently draining, which is counteracting quantitative tightening. So if all this happens, what we're looking at is slower growth. That's generally the time that you see gold shine. And up and through the time where the Fed comes in and reinitiates quantitative easing and just prints. That's really where gold has its capitulation top. So we've seen, and my timing was off. I looked for that to happen. Normally what happens is when the Fed begins raising rates last March 2022, that's a signal to buy gold. My timing was very off on that. Let me show you. Let me go over to March 2022, right? Here you go. Here's March 2022, and the pressure, it's trading basically where it is now. Now, what I got wrong was inflation was still really, really, really out of control. Really, really out of control. And in that type of environment, gold is obviously, the high yield is putting pressure on the precious metals. Since then, we've begun seeing signs that deflationary pressures are taking hold and gaining momentum. If that continues, and if we continue to see the rate hikes cause slowdown in growth, then gold should really have its time to shine. Now, when you line up the technicals, when you line up the macro, that's usually when the magic happens. Now, this is not like any type of risk-free trade. The risk to this trade would be two things. Number one, if inflationary pressures kick back up. If inflationary pressures kick back up, I imagine that's going to continue to put pressure on gold. Number two, if for some reason the Fed has engineered some miracle where actually growth does not slow down, even though we all know that the rate hikes are lagging, have a lagging effect, if for some reason there's just so much liquidity out there that all this hiking does not cause some type, like things broke, Fed injected liquidity. Something else breaks, Fed injects liquidity. Maybe that's the game they're playing. If we do not see any type of slowdown in growth going forward, then other people are going to find other things more attractive than gold. So those are the two main risks that you want to be looking at. IMF holding a bunch of gold, Craig, because their whole thing is looking for central bank digital currencies to release them backed by the special drawing rights. There is gold in the basket of currencies. Also, we're looking at what's taking place with the BRICS and the alliance between China and Russia and Brazil and India and South Africa and also Saudi Arabia now. It is becoming tighter and stronger. India, I forgot. It is possible that they look to launch their own currency, whether it's the yuan, it looks like it's going to be the yuan, or something else, and that is backed by gold. We'll look at that in a second. I wanted to lay out first the situation to let you know that there are risks. That G Black, we don't have a mechanical system for gold. We will look at in this video, our mechanical system for Bitcoin versus gold, because the question is, if this trade does play out, if you do see gold break out of this 12-year más o menos cup and handle, and by the way, look at when we talk about we want a shallow cup, look at the extension out of it. You know, it looks beautiful, and it looks beautiful from a technical standpoint, and it looks beautiful from a macro standpoint. By the way, when we first started looking was the breakout. This is like out of the handle. This is the aggressive CTM 1.0 style, but either which way. A lot of people are going to be wondering, well, what's going to be the trade here? Is it going to be Bitcoin or gold? We'll look at that from a standpoint of looking at the cross Bitcoin versus gold. And it has to do with a lot of things, including about, well, are we actually going to enter a recession? What that recession is going to look like? Look, I don't have a crystal ball. This is a trade that everyone should be aware of because if it does break out, if we see a breakout outside of this resistance and we see this trade begin to take off, and we'll look at potential price targets, we'll look at 3 different potential price targets, and all of a sudden everyone's going to be talking about it, except it'll be late. So we want to make sure that everyone just has the awareness, and anyone who's not even interested in the trade itself, you get to learn something. So it's a win-win for everything. Maybe coming up on Monday's session, London. All as I can say, if for any reason that trade, remember when oil traded negative forward contract? What was it, April, May 2020? If that happened, that would be the only thing that would entice me to jump in to the natural gas trade. But that's a good reminder for something to talk about here. At least look at it from a technical standpoint. I remember about 3 weeks ago, a lot of people putting that before me, thinking that was a good time to lean in. And I was just like, I don't know, we'll stay away right now. Maybe now is the time. We'll take a clean look at it when we can. Let's move over and let's begin looking. Before we do, we have volume. Volume should be decreasing as the price declines and remain lower than the average base of the bowl. It should then be increasing when making the move higher. Let's just get a glimpse at a volume. Now, in my opinion, and I'm not trying to convince you of anything, I'm just trying to give you a vantage point to help you form your own view. As always, we are here to build each other up and educate each other. And also, when we enjoy being here at any point in time, support the channel by making sure to hit that thumbs up button, but that is completely optional. Now, as we move over, I want to take a look at, it looks to me potentially like it's almost like a double handle. Like, was this the handle? And then we came back, hit the resistance again, and then the handle again, right? It looks to me, it's hard to distinguish. And look how actually I put the cup coming up between them. But for sure, it altogether, and patterns aren't always perfect, it resembles to me a handle. And I want to take a look at the volume with you, and you can see during this period over here, we had 2 bits of handles. This was the first one, and you could see, or I could see, I'm not trying to convince you of anything, volume looks to be decreasing. And then I could look at the second one over here, and I could say, once again, volume seems to be decreasing. And I just want to look back, and I can over here. Let me try another one. Let me try and see how far back we go over here. Yeah. So the volume's not going back too far. What I'm trying to see was what the volume looked like going back during the base of the cup. I can't do that with you right now because I just simply don't see it. So we're just going to go ahead and leave it like that. We're going to move over towards and look at some potential price targets. We're going to do it in 2 different ways. We're going to do it through fibs, and we're going to do it through what a measured move for a cup and handle would look like. So let me go ahead and get those out for you. And by the way, I mean, gold over the last decade hasn't done anything. True, right? Where was gold a decade ago? During it was over here, right where it is now. Hasn't done anything. Shift is not feeling so good. There's no question about that. Now, there was around, I got cute over here personally. I think I was waiting for $1,000 gold. Gold did not make it down to 1,000. That's a big move up though over the last 5-6 years though. It is a 100% gain, and it's all how you view it. But the way that I'm viewing this trade over here as that this was a super cycle in gold. Gold with massive appreciation. And then out of that super cycle, gold went sideways for over a decade, basing, consolidating, and now looks like it is getting ready here for a potential move up. a couple of different fib targets on the upside. Now I'm drawing it over here on a candle basis from the top we had over here in 2011 to the bottom we had in 2015. I get over here around $2,800 for the 1.618 fib target. And then on the upside, I have over here just above $5,000 gold, 2.618. Now, those are fib targets. I also want to look at what it looks like to put in some type of measured move over here. I'm going off the bottom to the top of the handle. Now, I use this as the handle. If you want to use this as the handle, it's the same exact extension. And then if you put that off of the breakout, the top of the handle where the resistance is over here, we're looking at, well, I think it's a little bit high. Let me come down a little bit lower. Más o menos, right? Pretty close to $3,900 on gold. Those would be the three targets that I would be looking at. And if you were able to get yourself into a nice position, the first thing that you're looking at is, of course, where you are wrong. We talked about in the beginning that there were risks to this trade. The risks that I see are, first of all, if we don't move into a period of slowdown, but instead growth, then other people are going to find a lot more attractive places to park their money than in gold. The other one would be if inflationary pressures kick up. Again, that's something that we have to continue to watch. That could absolutely happen. Both of those things could change the timing of this trade. And most of all, you have to wait for the breakout for the trigger to occur. Where you want to be looking about where you're wrong is up to you, right? One thing that you might want to do is, that's not how I'd want to position my trade from the bottom. So you know me, I like to get pretty intricate. I would be looking at over here, if I was looking to take a breakout on this trade, and by the way, I just have to say I think it's late. I should have been more, had better foresight with you all, and why within CTM we were looking at this trade and managing it off of a swing trading basis, meaning we've already exited this trade, right? We took the breakout and exited the trade, and we should have been looking at this from a longer term perspective. I have to say, and this is hindsight, this is not going to be helpful for anyone, that this is the better entry. I'm so sorry, I'm way off over there. That's not what I'm talking about. I'm talking about this one over here. Right? This trade over, this is the trade we took. I'm trying to find out and get it mapped up exactly as we had it, and I don't really see it, but either which way, everyone who's following on a regular basis, anyway, I'm a little lost there. I'm going to leave that off. I am, and I don't like to be. I like to know exactly what's going on, and I don't see it. But the point is that coming out of the move out of the handle, the pullback out of the handle, it gives you a much better risk to reward. We're a little late here, but here's where we are today. And if you're looking to put together and engineer this trade, what I think that you're looking at is the low over here. If price trades below this area, at this point, this is going back. You had an engulfing candle on the monthly on the monthly time frame. Getting below here, 1790 at that point, I would say that something's not right, something's wrong, I'm off. Is it possible that you come down to the weekly chart and look over there? Well, let's take a look at it, because maybe not. And I think we should see, right? Roughly the same area. I might even be looking to do this. And if we have a sell impulse over there, I'd rather get out of the trade. If we had a sell impulse, this is the weekly. If we had a sell impulse taking out this trend line, I'd rather get out of the trade, save myself a bunch of capital. That's a $100 move on gold. And then if it resumes up and I get another entry, get back into the trade. That's how I would be looking at it. And that is our view, our look at gold. Problem with gold is that I bought a lot more than 10 years ago. So really gold holders have lost. The reason you bought gold, Eagle 3, was to preserve your purchasing power. In the last 10 years, it has not done that. There's no question about that. It has not preserved your purchasing power because you've lost a bunch of purchasing power to inflation. You could say on a dollar basis, you have preserved what it looks like in dollars, but you lost a massive amount in purchasing power. But I've always looked at gold as insurance, as a hedge against the current financial system. And I continue to look at it like that. Gold is the most heavily manipulated instrument in the world. I believe that to be true. And, is there a possibility and potential that gold could be repriced and or overnight? Absolutely. That's why you hold it. You're not holding gold in order to be able to make any type of speculative investment, in my opinion, or at least I'm not. But also from this perspective, I mean, you've been holding it for 10 years, which means it's kind of like Bitcoin and going back to like people who bought Bitcoin, 2014 after the big run up, buying it at 1,000 and then watching Bitcoin get melted down. And, fast forward, if gold does some gold things here, looking forward, it's all gonna work out. But you had a big 12-year super cycle on gold, and then you have consolidated for the next decade. Let's see where you are going forward. I think in the long run, you're going to be happy for that hedge. I hope so. I really do. That's great insight over there. I wish I had that lined up to look at together before we got into it. But guess what, Robert? Maybe in the next session, we get to, it's cumulative knowledge that we get to go back and forth. We are in a recession. I don't know, Vaca net, and we'll see going forward. And it could be. All right. But one thing is for sure, banks right now are not lending. I have lots of friends running businesses, and right now banks are not lending. That could cause some problems coming forward. As you all know, I get a little bit concerned. I'm cautious about what comes into the fall. Santiago Capital, just doing my homework in preparation for the new gold-backed BRICS currency that's on its way. Could someone please point me to the most recent audit of the official gold holdings for Brazil, Russia, India, China, and South Africa? That's obviously tongue-in-cheek. Not only could their gold not be audited, but also the supposed holdings in Fort Knox of the United States cannot be audited as well. And Santiago is making the case here for, obviously, with him not knowing it, but for Bitcoin. And, we're going to talk a little bit about Bitcoin here in relation to gold. Bitcoin, obviously, is fair and just. Will the BRICS make a move towards backing either the yuan or a basket of currencies with gold? Will it come from the IMF? And then we run into the same problems that we had when the dollar was backed by gold. It could work for a little time, but trust is involved. Don't trust, verify. Could this actually be setting the stage for these countries, or even the US, to have to adopt Bitcoin and the Bitcoin standard? I believe so. A couple of headlines over here. Yesterday, we were talking about France buying liquid natural gas in yuan in China. Today, we have China and Brazil striking a deal to trade in the yuan. Massive headlines. As we see that, by the way, we also see like Banana Republic type stuff happening within the U.S. Everyone is taking notice. It seems that the U.S. there's one for VacaNet, recession ahead, University of Michigan consumer sentiment sliding for the first time in 4 months. I think there's a little bit of lag on that. And this is the one I wanted to point out for you. I knew there was something down over here. Why we were seeing inflationary prices come off today, we did have inflation wage growth soaring, that is indicative of inflationary pressures. So again, it's not just like, I know that we're seeing the deflationary pressures and we caught the top of it June into July, that 9.1 CPI print. And it took a while, longer than I expected, to gain any momentum. It wasn't until September, October that we started gaining some momentum, and that continues, but that could kick back up. Do not get confused. We are data dependent. I thought there was something there I wanted to share with you. There's not. Let's move over. Let's look a little bit about gold and Bitcoin. This is through the lens of CTM 2.0. Well, first, let me show you through the lens of some simple TA, right? And you can see this is the prime trend line. Here's the breakdown, retest, and then resumption down. Good place to obviously lean into Bitcoin over gold after gold's massive run up. We put out that poll in early 2020. It was at the end of 2021. And I was like, what do you think is going to outperform in 2022, gold or Bitcoin? Almost every single person said Bitcoin. Clearly and obviously not the case. Massive uptrend on Bitcoin. Look at CTM 2.0, only executing off the upside until we got into November. If you go ahead and you move that prime trend line off of here, you could see that this is really where the breakdown occurred. And if you're trading that from a CTM 2.0, this is going back 3 years. This is going back to 2020, January. It's okay, right? It's nothing like, obviously, what we do versus the US dollar. So that's why we don't focus in on it. Our strategies versus the dollar, whether it's Bitcoin, Ethereum, or Cardano, do not even begin to compare. But some people might like to know how they should be positioned for different reasons, and amongst them protecting capital. Even looking at a simple TA perspective, breakdown, retest, resumption, conquering the markets all day long, that trade, you probably got to take some profit on the way down. Here's the first area of support. You take a small piece off, you lock in the trade to break even. Ultimately, you were stopped out at break even on that trade. And then how you re-entered would have been off a trend line like that. That break of that would have you short. CTM 2.0 taking both sides of it. This trade didn't wind up for profit, but if it kept extending out forward, it sure would have. Anyway, I don't know what happens, as I said in the beginning of this session, in regards to what happens between Bitcoin and gold. Right now, from a traditional TA standpoint, obviously, since the breakdown, Bitcoin is been appreciating. If we move towards some type of recession in the US and lots of slowdown, I think Bitcoin is going to be under pressure. And I think that gold is going to be soaring. And that is why you just can't get comfortable and you have to continue to monitor the markets, both sides without bias, and do your best to stay on the right side. Yeah, there's no question about that. I mean, everyone has their own incentives and out for themselves, including the IMF. The IMF is not going to be behind the BRICS having their own union. They want it to be CBDCs backed by the special drawing rights. They want complete control. We'll see who gets it. Silver also seems to be building up in a couple handle. Oof. That's a bookmark. Maybe we could take a look at what's going on there next week as well. This is also of note, right? We were just talking about how do you audit those gold reserves. And then there's also that note. And, Perth Mint, they have this pristine reputation. And then the report is that they were sending fake gold to China. So what's going on there, I don't know. Are the powers that be trying to undermine the trust in gold? Or did that legitimately happen? But the whole point is you can't trust. You have to verify. This is why, in the end, Bitcoiners believe Bitcoin wins. We talked yesterday in yesterday's session about, this is amazing timing, just got lucky here, but I was talking about I expect to see the Fed's balance sheet as quantitative tightening continues to run to begin coming off. And look at that, the next report was released, and that's exactly what we see is the Fed's balance sheet beginning to come off. And my whole point was that as we do follow liquidity, I'll come back to all of that in 1 second. I don't have it up. I was looking for a particular chart, and when we get to it, I'll come back to it. There we go. Look at that. Look, this is liquidity coming off, right? Let me just make sure I got the right one over here. There it is. Liquidity coming off. Bitcoin deviating for now. We'll continue to watch and wait and see, but we have to be aware and watch everything is the whole point. If you didn't get a chance to watch that video yesterday, the coming liquidity crunch to crush investors, watch the U.S. Treasury cash balance. You're going in the first 12 minutes of this video, first 15 minutes, for sure, learn a lot. Here's the section where I said, watch what happens next, pointing to the down. That's exactly what is happening next. Now, it doesn't mean that we can't go back up. Here, let's take a look over here. We're seeing balance sheet come off today. Here's the lending, the Fed backstop facility, right, that the banks are borrowing off of it. They're still borrowing money. You can see that they're still borrowing money. And if that rate increases, if there's further bank, let's call it pressures, and they need to access more capital, we'll see the balance sheet going back up. So quantitative tightening right now is beginning to supersede that. That doesn't mean that it can't go back up, just like inflationary pressures. And this is where we lose a lot of people. A lot of people don't want to put the work in. They just want to be told what someone thinks is going to happen 6 months or a year from now. And then they just want to place a bet and not take any responsibility in what it means to be any type of trader or investor. And that's not how it works. It's extraordinarily difficult. You're competing versus the brightest minds in the world for capital. It takes a massive amount of work, thought, preparation, and that's all before you begin to execute. And there's many problems and difficulties with execution alone. You got to be in it for real, and you got to devote yourself, and you have to take it as it comes. That's why we do what we do here. If you enjoy at all or learned anything, go ahead and hit that like button. This is looking at Ethereum Bitcoin from a CTM 2.0 versus 1.0. Maybe next week we'll get into it. You could see the returns are not, this is also since 2020. Why the return is nice, it doesn't compete with what we do versus the US dollar. And outside of someone looking to go from wallet to wallet, it's hard for me to understand how this strategy could be utilized. We have the answer, and you see a lot of people talking about Bitcoin dominance, and a lot of people guessing which way. Look, we're able to do that from a mechanical standpoint, no emotion involved, and know that we're on the right side. But I don't see the alpha in it. If anyone does, let me know. We got the solution. I don't know what's going on today, if this is a little bit of noise. We're looking at the quarter end, the first quarter end today. There's a lot of positioning by funds out there, including going into the reverse repo market. I'm interested to see what this data point looks like tomorrow after we get today's data. I imagine there's going to be more money parked in over here. You might see a bit of a dollar bid on that today. I don't know what that's going to look like afterwards. Here's our next area that we're looking for of a buy impulse. And we still got not only some time before that would be reached, but we have this, I was going to say horizontal, but it's sloping 12-year, 14-year trend line resistance above. So for me today, there's no signal in that, but aware of what's happening. CTM all day long, a lot of people here simply left behind, not following the technicals. Absolutely, my opinion. I don't know, Vakanet, you know my opinion on that there's a great risk in obviously All of it seems to be a fight taking place right now for authority between the CFTC and the SEC. SEC has been aggressive. CFTC going after Binance now in that litigation, talking about or labeling Ethereum a commodity. I don't know how that all plays out. Massive risk everywhere. But I don't know how it ultimately plays out. The good thing about that, as you know, Vakanet, it really doesn't matter from our vantage point, meaning that we trade both sides without bias. It's just as important to know when to be out of the market. If at any point in time we were seeing any type of structural weakness occurring in Ethereum, we're going to be ahead of that. That's my belief. And we'll continue to stay in front of it. This is the NASDAQ over here. After the breakout, the retest, it is now beginning to resume up. I do wonder, are we going to take out the high over here from the summer, August? It seems like that could be an area pulling towards like a magnet. If you take this trend line, you can see these light lines I have over here, right? You could I have this one up over here to wonder. Now I'm looking even harder. Is there another one lower? But I'm looking not just at horizontal resistance. I'm looking if we took out that horizontal resistance. Usually when you do, the initial push goes into the next resistance. Could it be into that one? I wonder. It could be 14,000 on the NASDAQ. Now that we're just following the technicals. Burry flipping over here. I wonder if that a lot of people who are like very just bearish on the markets for no other reason than sentiment, not following really what's happening. But again, those people were generally late coming off the top of the bull market, and they were a little late. And then if they're late again, that really hurts them. But a lot of people who are just like, when Burry said sell, and that was their glimmer of hope that, okay, and then when he flips, does that cause them to flip? I wonder. And could that be a turning point for sentiment? It could be. I don't know. I just want you to know that I'm just going to continue to trade both sides. And right now we are positioned with two repairs in play. I'm watching my backside, a sell impulse triggering. We're going to take it. We're going to be making sure we take it. Now, the further we go up, it's not just going to be an extension of this line. We're going to have to watch what's going on. And look, that's what we do each and every day. So we'll figure it out in real time as we continue to see what happens. Something else I wanted to say, I don't know. And you all know my concern about later on anyway. So, all right. And that's why I have this up here. This is that constant reminder. You never know. You never know. And even though you're off sides, if you didn't take this first repair because you thought that it was going to roll over, you're off sides. And you're off sides for a significant move, right? Since then, roughly 10%. That's a big move on the NASDAQ. And you're off sides. That's why you got to trade both sides without bias, and regardless of your macro view, this is where TA comes in. You have to line up the TA and the macro to get things to really happen. TA is to protect yourself. It's to manage risk off of. Curious to see if we have had any repricing. Still 50-50 coming into May's meeting. Also June, same thing, 50-50. Now, that will change after the next 2 weeks. After we get out next week's jobs data and then the CPI of next week, this is going to change, and then we'll have a better idea of what's happening. CTM. Uncle Rico. Uncle Rico. Jordan, you were wrong about Bitcoin. I'll never watch you again, flip-flopper. Even though I'm watching you right now, you're no different than Kramer. Oh, thank you, Uncle Rico. That's what I meant to say. People thought, okay, well, Kramer said over here that, watch, the NASDAQ's going to move up. And Burry said it's going to go down. And then over here, Kramer said, if you're not long the NASDAQ, you're wrong. That was another thing that maybe a lot of people with like a bearish bias might have thought that, okay, well, if Kramer's saying something, he can't be right. If that's your investment thesis, it's not going to work out well for you. You have to be better than that. You have to be better than that. Uncle Rico, who was Uncle Rico? Who got it more right than 53,130 earlier? As far as, look, de-risk, something's not right. Uncle Rico, who do you know that got more people positioned in during the accumulation stage? Uncle Rico, who do you know, anyone else that called, why people were calling for 1,500 Bitcoin within 3 months, 8,400? Uncle Rico, you're a tool. Please do not come back. All right. So, Taco Friday, we're here at it. People cannot, that's what I said, this game is too hard for a lot of people. Most people are not able to take responsibility for themselves. Most people could you imagine? I have an extremely bullish bias coming into this area, looking for a blow off top, looking for a move above 180,000 non-diminishing returns. That's my bias all day long. I call, by the way, over here that we will make new all times by October. What did Uncle Rico say? You're so wrong. And then we had wave 1, wave 2, making that new all-time high by October. This is when people were really bearish on Bitcoin, the best of them. And then at this point, can you imagine having such a bullish bias and then being able to pivot when things don't play out technically as you think? Not only that, Uncle Rico, from that point on, I said, you know what? We'll still be the best at the 4-year cycle, but we're going to move over into our TA. And then what CTM has built together since then, absolutely awe-inspiring. And it went beyond TA. We went fully mechanical. Keith, you know me. I'm looking at the TQQQ, big up Keith, and I'm like, it's not what I think. The reason that we develop these strategies is to make sure that we're on the right side and could stay on the right side. And right now, TQQQ is long, holding a position in profit, 7.9%. It's a killer on the year. It's up 16%. Now, the downside is a small loss. So you call that 13% on the year. And then holding an open position right now, almost 8% into profit. I mean, but Keith, my opinion is two things. Look, the whole point is to take away emotion, to have something, an edge that's mechanical. And then Keith, when you look at what's going on from a technical basis, I mean, if we would have traded below the purple line and closed below it, that would have taken me very neutral and cautious unless we got back above it. And then if we have a breakdown, look, you just got to sell. It's a sell impulse. It's a major technical breakdown. But right now that we've had the opposite. We've had the breakdown and we've had a retest up. And then we have our strategies also at the same time having us long here. And look, there's people out there speculating all the time, and you see over the last 3 months, I don't care who it is, traditional finance, almost everyone has got left behind. They can't make sense. They don't understand. This is why we did what we've done. And you have to understand also, like, we don't expect to be right. Look at this, Keith. Let me go jump over to list of trades and just remind you, although we're holding an open position right now into profit, we take lots of losses. The losses are smaller than the wins. And we believe, look at this. This is this year. 16% profit holding a nice open position, but wrong 7 out of 10 times. That's real trading. That's the edge. And then we also look at FNQU, and it's a monster holding a 12% open position. It was up 82% on the year. That's not just 82%. Add in the 3%. They compound together, but call it 82% and now holding a 12% open. I mean, this is the way to go. Tesla also now kicking off here, holding an open position, 5% into profit on the year, doing pretty well as well. And that's the way to go. It's up to you whether or not you're going to embrace it. Daily on CTM 2.0, holding some positions now and continue to do really well. Again, this over here is a great solution for most people. You have these experts telling you, look, park your money into short-term treasuries yielding 5% because you can't do better than that. Well, if they can't do better than that, they shouldn't have a newsletter. That's my opinion. We could do better than that for sure. We're seeing Cardano here kicking up a little bit as it holds now an open trade, 6% into profit. It's interesting as we looked at Bitcoin. That's just a gentle reminder to get everyone executing. And on the right side, it's tough out there. There's no question about that. The markets are extraordinarily difficult. That's why we look at our lines, our discretionary lines. That's why we review the mechanical system, just to try our best to stay on the right side. Bitcoin over here, out of the trade. I wish it wasn't. I wish it was still in the trade because price has kicked up since. It will get back into the trade if we break out. I know that. The beautiful dance is that we are hedged. We have Ethereum holding an open long position, and Cardano is building. It's interesting because someone yesterday in the live stream mentioned, I'm looking for it, mentioned how Bitcoin dominance was at two-year resistance. And we looked at it and we talked about it. And now off of that, you're seeing alts kicking up over there and pumping. It's just really neat. I don't know where Cardano is going. I don't really care. No, I mean that sincerely. Because I would not hold any type of alt. There's no question about that. But if we're looking at since 2022, right? Cardano. Well, man, people that held Cardano in 2022 got absolutely demolished. We didn't have a long trade. Let me show you how far. Let me go back to 2021. Look at this period. This was our last long trade, August of 2021, exiting over here. And then there was not another long trade until January 2023, right? The end of January. This was all attacking on the short side. Why would you want to hold Cardano? 24% drawdown, 2,500%. Give me 2023. Give me 3 years, 2020, right? So, I mean, hold it. I don't know. I do know, but I'm just sharing with you. All right, everyone. That's us closing out this week on this fun Friday. Interesting look today at gold, making sure everyone is aware of things that they're going to wish that ahead of time they were be. Look, Joseph, you're here every day putting the work in. So am I. So are we. That's what it takes. People talk about building during the bear market. Amazing what we've been able to accomplish through that collective collaboration. I wish you all a wonderful weekend. God bless you. Have a wonderful time. I'll try to take a look at some of those things next week that were mentioned, such as natural gas, such as silver, also building a cup and handle, and we'll see what the markets bring us. Until then, everyone, take care, and I'll see you all later.